to be on all the ballots on which he qualifies. It would have been somewhat chaotic for him to be, not be able to be on some and be on others. Colorado was the case that this was brought from, but in state election officials in Maine and in Illinois had also made this case, and there could have been others as well. So this basically says he can go ahead. He doesn't have to mount state by state kind of defenses to be on the ballot, that he should be on the ballot in all the states. So that makes that clear. The reasoning behind it was somewhat interesting in that basically they said that in a 13-page unsigned opinion, there was not one justice who signed this, saying that this means that Congress should be the one to decide if someone is not eligible for the ballot. This is not something that various states should be undertaking, especially under this particular amendment, 14th Amendment, and the Section 3 of this. They said states shouldn't be the ones determining this. It should only be Congress.
Jody, we know that Neil Gorsuch, Brett Kavanaugh and Amy Coney Barrett were Trump appointees to the Supreme Court. So I'm curious what that split on the decision was.
Yeah, so there were, while it was unanimous in terms of the overall decision, there was it sounded like somewhat of a dissent almost from the three liberal judges, but then Amy Coney Barrett joined them for that, basically saying they thought that this decision went a little too far in its reasoning, in its rationale. In the long run, that doesn't mean a whole lot, and some are asking whether this could be, are we determining anything for this in terms of implications for another big election case that the Supreme Court is deciding now, that have said it will hear arguments in April and will decide after that, which is a very big deal, whether Donald Trump is immune from prosecution because he was president, actions undertaken while he was president. And I'm not sure that legal scholars think there's a whole lot to be read into that particular decision, how they might decide that from today's ruling.
Our Bloomberg Political News Director Jody Schneider there in Washington. We'll keep you updated on the US presidential race, of course. Our special coverage of Super Tuesday right here on Bloomberg TV. That begins at 10 a.m. on Wednesday. If you're watching in Hong Kong, that's 1 p.m. in Sydney. Well, Apple shares fell to their lowest level as we continue to watch for the sort of reaction across the late trading as we... in fact, we'll get you much more on that story a little bit later. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been an innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business,
like carbon capture,
that can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
If you want accurate AI pre-built for CX, then you need it ready from day one for the challenges your business faces. When generic AI is used for CX, a lot can go wrong. Win the CX AI race with Nice and Light. The most accurate, trusted, and complete AI built for CX on one unified cloud platform. It drives growth and protects your brand.
Get ahead of the curve with Nice and Lighten. CX AI now.
As high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Well, Apple shares fell to their lowest level since November after the tech giant was hit by a $2 billion penalty from the European Union. Apple is being investigated for allegedly shutting out music streaming rivals, including Spotify, on its platforms. Let's bring up Bloomberg technology reporter Mark Gurman, who covers all things Apple, joins us in Los Angeles. Mark, what are the implications of this?
Yeah, Heidi, Annabelle, thank you so much for having me. This is a historic day for Apple. This is the biggest fine in Apple's history for anything related to antitrust. Obviously, they received a $13 billion ruling in relation to taxes being stored in Ireland and the savings happening in the U.S. But from an antitrust standpoint, this is a big deal. So this is, like you said, a $2 billion fine. Now, the majority of the fine actually comes as additional penalties that the EU decided to slap on top. They did let it slip during their press conference that the actual fine amount is somewhere in the $40 million range. It's difficult to understand how they calculated the rest, but they certainly believed that Apple is deserving of this. They believe that Apple shut out Spotify, other streaming music services in the EU, and it's time for the iPhone maker to pay up. And then one more thing I'll say, another big point they said is that other companies are now free to sue Apple over this. So the penalties for Apple could continue to stack up beyond this initial $2 billion amount.
Yeah, I'm curious, Mark, perhaps this is sort of a precursor for what's to come, because that pressure on Apple in the EU, are we likely to see it extending to other parts of his business in that region? Could it also extend to other geographies, for instance?
Well, I'm going to ignore the EU for just a second, because this is a $2 billion fine, probably a one and done. I assume the EU will argue with Apple a bit on how they're complying with the Digital Markets Act. Their compliance will come into effect tomorrow. But let's keep the EU, put it on the back burner for a second. Something very significant is going to happen probably in about 2 weeks from now. The United States is going to sue Apple. The Department of Justice is going to file a lawsuit against Apple in relation to antitrust for things ranging from the App Store to the payment chip in the phone to other features where the government believes that Apple is stifling competitors, whether that's hardware makers of accessories like Tile or app developers like Spotify. So like I said, the US, they're going to sue Apple. So that has the potential to be far more significant than this $2 billion fine.
Yeah, and certainly we've seen a lot of pressure on Apple's stock already, so we'll be tracking that very closely. That was Bloomberg's tech reporter Mark Gurman there in Los Angeles. And just ahead, we preview the trading day in Japan after the Nikkei 225 breached the key 40,000 level for the first time.
AES is the largest seller of renewable energy to corporations in the world. We've been an innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy that they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
The world needs ways to reduce carbon emissions.
ExxonMobil can help. We're working on solutions for our business
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
The reception, the acceptance of Purosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
All right, kicking off with some breaking news here. We've just got Tokyo inflation numbers that are dropping. Tokyo inflation, a leading indicator for the nationwide reading here, but we have seen that core CPI coming in bang in line with estimates here, rising 2.5% on the year. So it's a big increase from the month prior where it was at 1.6%, but there's a couple of different factors you've got to take into effect. And the main one here is base effects, because actually when you take a look at the year earlier base, this was a period when we had a lot of energy subsidies coming through. So that jump there that you're seeing to 2.5%, the core reading, could be a reflection of that, not really a broader surge in price pressures. The headline reading as well, that's actually come in a bit stronger than had been expected by economists. So the reading there is 2.6%. The survey had been for 2.5%. And the core as well, that's come in line with estimates at 3.1%. Is this going to be something that really forces the BOJ to shift earlier? Our view from Bloomberg Economics was no, that won't be the case. They're actually still expecting a pivot in July at this point in time. But they are the Tokyo inflation numbers that we're just getting through there. Of course, dovish policy settings from the BOJ has been one of the factors we've been tracking for that continued rally in Japanese equities. Yesterday, the story was the Nikkei 225 climbing above the psychological level of 40,000 points for the first time ever. Prime Minister Fumio Kishida says the influx of foreign investors is promising.
It is encouraging to see the market's positive response to our efforts and the transformation of the Japanese economy. This year is a critical time for this trend to take root. The government is committed to achieving a virtuous cycle that includes structural wage increases.
All right, for more, let's bring in our Asia equities reporter, Winnie Zhu. And Winnie, I think the key question we've got in all of this is how long is this going to be lasting?
Yeah, so I think this time, like, as we hit that 40,000 mark, it's really showing that bullishness in the market. And we spoke to Amundi and BlackRock, really telling us that Japan is in this very sweet spot. You see the U.S. Having pretty strong earnings growth, but the valuation is also pretty high. And on the other hand, you have Europe on the exact opposite. And you really put Japan in that unique position for global investors to really have that positioning in their portfolio. And another interesting thing is that Japanese equities is still a major underweight for global investors. And hence, once we see that change in the global investors' appetite, that might actually lift Japanese equities further up. And some of the domestic investors who visited Europe recently told us that they are hearing that these investors are curious about Japanese equities and are willing to buy on the dip. So we're really excited to see where the market is going to go from here, and believing that and as we the investors in the market also say that, you know, with the earnings growth, with the yen still remaining quite weak, and also the Tokyo Stock Exchange corporate governance reform, those are some of the key catalysts that will drive the market further.
There also seems to be some concerns around the rally getting overheated at this point. What are the risks going forward?
Right. So one of the key risks is that when we compare the topics and the Nikkei, you see the Nikkei really reaching that record high. But the topics is still actually 6% away from that record high. And yesterday, when the Nikkei hit the milestone of 40K, topics actually slipped. So some of the investors are worried that maybe the rally is still too crowded, too narrow, driven by some of the key tech stocks. So it's really important for them to be more convinced that the broader rally, the rally is expanding as we see some of the other stocks really rising with the rally. And another point is around the yen. So although the BOJ is unlikely to kind of change the outlook of the yen because they want to stay overall in accommodative monetary policy environment for the market. However, as we see how the Fed might cut rates in the coming months, that might actually have a bigger impact on the yen. So watching the yen's potential appreciation weighing on Japanese market is another risk that we need to be mindful of. And just now we mentioned the CPI. Some investors are actually thinking that maybe the rally is going too strong and the momentum is not the economy is basically not catching up with the market's momentum. So we see quite a mix in terms of the economic numbers. On one hand, you have a pretty strong CAPEX numbers yesterday. CPI is pretty in line today, but also the GDP was still pretty weak. So I think so the market is basically thinking that we should also keep an eye on if the economy is actually keeping up with the market.
Bloomberg's Winnie Su there. Take a look at morning calls as we're watching JP Morgan's chief market strategist, Marko Kolanovic, seeing the dramatic rally in US stocks and Bitcoin as indicative of rising froth in the market. That's where conditions typically precede a bubble, asset prices rising at an unsustainable pace. Kolanovic says investors may be assuming that an increase in yields reflects economic acceleration, but earnings projections are coming down. He adds that the market appears too complacent on the cycle. Meanwhile, Goldman Sachs Wealth Management CIO Sharmin Masavar-Rahmani says China's big stock market declines are not enough to warrant putting money into the country. She sees the economy struggling in its three growth pillars of the property market, infrastructure and exports.
Given how cheap China appears, people inevitably say, well, has it discounted the worst news? And our view is that one should not invest in China. First and foremost, we think the economy is going to steadily continue to slow down for the next 10 years. That's a very important factor. Second, when we're looking at policy uncertainty, it is not clear what the overall general direction of policy will be long term.
Also sharing this bleak view on China is Roubini Macro Associates CEO Nouri Roubini. He told us where he sees longer-term structural issues with the world's second biggest economy.
I'm more concerned about China than Europe. Europe has been in a pretty much stagnation for the last few quarters. The same thing with the United Kingdom. But think of it, given the shock that came from Russia, Ukraine, there could have been a real hard landing. Instead, they've had flat economic activity for the last 4 or 5 quarters. The other problem with Europe, of course, is aging, lack of technological innovation, and things that are more structural. China, I think, is a more serious story because Chinese potential growth used to be, for 3 decades, 10%, then went to 5%. I would say most people now estimate the potential growth for China for the rest of the decade is going to be between 2 to 3%. It's a story not just of aging, it's a story of state capitalism, it's a story of less FDI to China because of geopolitical stuff, a story of less export-led growth because there is protectionism all over the world. Consumer and business sentiment is in a funk, in part because of the policies of Xi Jinping. And finally, consumption is low as a share of GDP, and savings are high because you don't have a social safety net. People have to save for old age, for retirement, if they get sick, if they get unemployed, the migrant workers don't have access to public services. So there are really structural reasons why growth in China is going to be 2-3%. And that's a real shift for the global economy.
Is that a disinflationary shock or an inflationary shock for China to be growing at a much slower pace?
It's disinflationary for China, and we already see it in the data. There's also disinflationary for the world in 2 ways. First way is that essentially China is dumping on global market all this excess capacity. And of course, the Chinese currency weakening means that other currencies are appreciating, and that's also deflationary. And finally, if China is growing less, demand for commodities, everything else equal, will be lower, and part of the global inflation for the last few years has been commodities. So overall, a slowing down China is deflationary for the global economy.
Does that economic malaise risk a more assertive foreign policy coming out of the CCP? Is that what you'd expect?
I'm not sure because they had a very aggressive foreign policy, but I think they've realized right now this kind of a wolf warrior policy doesn't make them friend in Europe or around the world. They have to worry about economic growth. The National People's Congress is right now. They're very insecure. And the reaction to the Taiwanese election has been actually relatively moderate. They could have been much more aggressive. And I think they realize in a situation like this one, escalating tensions with the US is not good for them, it's not good for relations with Europe, and they're taking a slightly more cautious approach. I think they're really starting to worry about the economy, about the stock market, and probably, after the Xi Jinping and Biden meeting last fall, there's been a beginning of something of a thaw. I don't think it's a strategic change. There will be continued strategic competition between US and China. The Cold War is going to be like this, but probably for the next 12 to 24 months, the relationship are not going to escalate in the negative direction because they're worried about the economy.
You mentioned the NPC. Can we see any more stimulus coming out of the Chinese government?
Some people have suggested that they should have much more monetary and fiscal stimulus. Xi Jinping and most of the policymakers are resisting it, in part because there is already too much debt and deficits, and doubling down on credit fuel fixed investment is going to be dangerous. But I think that even Chinese realize that the slowdown of growth is structural, is not cyclical. And if you do more monetary and fiscal stimulus, you increase debt, you have a short-term boost to growth, but it's only short-term, and you're creating more debt and leverage and more financial risk down the line. So there will be some stimulus, because without that stimulus, their target of 5% for this year is not going to be achieved. I think potential growth already in China right now is less than 4%, but I see growth this year being closer to 4 rather than 5. There'll be some stimulus, because without it, growth becomes on a 3 handle. That's something is politically not acceptable, but not as much stimulus to get you to 5%. So something in between.
That was the Roubini Macro Associates CEO Nouriel Roubini speaking to Bloomberg Surveillance there. And coming up, we'll have a closer look at China's climate goals and how it could impact this week's NPC meeting in Beijing. That's next, and this is Bloomberg.